Happy Wednesday. And the important thing is we've got a modest rally going on here, and tech is rebounding with a couple of exceptions. But I want to just show you Europe because we've had some great moves over in Asia, particularly China. The Hang Seng is now up nicely on the week. Europe's been rallying. We're up about 4% for the week. The French CPI numbers were lighter than expected. Germany was yesterday. Spain was the prior week. So inflation expectations coming down a little bit over in Europe. That's a very good sign. They've got a nice rally going here. Here in the United States, kind of a mixed bag. Remember, energy, the big leader last year. Energy has been the laggard so far this year. So energy is to the downside. Real estate, materials, financials, marginally to the upside, as you see. The important thing is tech stocks, for the most part, have stabilized. Take a look at the S&P 500. Apple's on the upside. Of course, Salesforce on that announcement from Benioff is moving to the upside. Microsoft looks down to me. That's a bit of an outlier right now. There's the S&P 500, 3840 right now. And remember something, the Santa Claus rally is the final day for that. We'll take a quick look at that here. Remember, the Santa Claus rally is the last 5 days of the year, the first 2 days of the new year. So this is the last day of the Santa Claus rally. On average, it's up 80% of the time in these 7 days, an average of 1.3%. So for this to work, it has to be over 38.22. And as you saw there, 38.41 right now. So far, the Santa Claus rally is in effect. We'll see if that happens at the close. The big debate amongst everybody down here, was October the bottom or not? So remember what happened. We're well off of that bottom here, but on October 12th, we bottomed at 35.77. 2023 earnings were very optimistic at that time. They were expecting earnings to be up about 7%. The PE ratio was 15. That's below the average. It's about 17, but still very, very rich if that is indeed a bottom. Most of the time when you have market bottoms, the market tends to bottom at 10, 11, 12 times. So there'd be a pretty expensive bottom if that actually happened. So where are we today? Well, the S&P is, 7 or 8% higher. It's at 38.24 is where we opened today. The 2023 earnings are down a little bit, not quite 7% like last time, but still up rather notably 4%. So prices are 7, 8% higher. Earnings only 2 or 3% lower. That means the PE ratio is a lot higher at 16.7%. I think the problem with this whole issue is somebody is wrong in terms of their opinion. Right now, the market seems to be very clearly positioned for a very shallow recession. What does that mean? Well, just look at what you've got here. Earnings are flat to up slightly. And the multiple is about average at 17 times forward. That's not a very serious recession. At best, that's a very shallow recession. So if indeed we get a shallow recession, then the market is not crazy overpriced. But if we get anything more severe than that, stocks are very richly priced, and we can go down easily. It depends on who you ask, another 10% or so. And this is where you get to that debate about whether or not we're at the October bottom. Where are you on the side of the recession? Mild or more severe? That's the terms of the debate right now. Carl, back to you.